Hi, this is Shane with The Rational Trader. It is October 13th. And this is a video from members, but I'll post it up here on the site. Not a lot of public videos recently. I've been working on adapting the machine learning system to trade the ES. The ES is a different animal in that it's got a lot more volume. And it's, as an index, it does, I don't want to say it's choppier, but it does a lot more backing and filling. And so what I'm doing here is applying some extra criteria on what constitutes a good entry. And I've been running this for 3 weeks now. And the last few days here, I've zeroed in on the final parameters, which we're going to go over here in just a moment. But we need to explain first what is different. All right, so this is the ES. This is yesterday. And we have these signals here, like right there. That's a short. That's a short. Okay. And in the past, what we would do is we'd see this short, let's say this one here, and we'd as soon as we saw that, we'd place an order right there, and we'd either get filled or we wouldn't. 2 bars go by and you get filled or you don't. Here, same thing. We'd place an order right there. Okay. As soon as this bar here finishes closing, that bar, the bar with the signal. All right. And in the ES we use a 4-tick stop, so this one would have gotten stopped. That's what we used to do, and in fact, actually, that's not entirely correct, because because we would have this kind of variability here, where you'd get tagged. You can see the signal sort of correct in that the market is going to roll over here. The larger picture is that it's early before the nice fall. But on this particular signal here, the other markets that we trade require a down bar before it'll take this short. So it would wait until this bar here. Okay. So we look for 2 bars, and if we get a down bar after we get this signal, then we would place an order right there, 1 tick off the close of the down bar here. So you get the signal there. Wait for a down bar, you get that there, place an order, and in this case you wouldn't get filled. All right. Which this is, in this particular case, that's conceptually similar to what I'm now requiring. But we end up getting much better entries using what I'm doing now. So what I require now is an actual pullback, and I need to get filled on that pullback. All right, and so if this here is a sort of classic example. The signals here, you can see it's a short signal. All the shorts begin with in the 200 series. So this is a 221, and you can see this pullback is occurring here, and we end up getting filled right there. Okay, now if there isn't that pullback, you don't get filled. Right? You either don't place an order or you don't get filled. So in this particular case, we see this pullback happening, and the system sees it, places an order, you get filled there. First target is here, 4 ticks. Second target is here. We're trading 3 contracts. Then you have a runner that's you either have no target or it's just way out there. And I'm trailing by 8 ticks here, and it gets taken out there. So +4, +8, +6 on that trade. This is Thursday, so this particular day there were 2 trades. I'm looking at this column here, a number of trades. And since there's 3 contracts per trade, you can see 6 contracts traded. There's 2 trades. So we'll look at the other one in just a moment. In this case here, you can see there's a short signal there. All right, but the market's not pulling back. The signal comes, and this doesn't count. That already happened. I need to see a pullback now that I've gotten my short signal. And so it starts there. You see that? This bar closes up. And so when this bar finishes closing up, I place an order. Or the system places an order. In this case, it doesn't get filled because this needs to be a real pullback, not just one little bar. All right, in fact, the order gets placed. 1, 2, 3, 4, the order got placed right there. And if you don't get filled within the parameter I've set is 2 bars, then you cancel the order. So what has to happen here is this pullback has to continue all the way to that fill point right then. Even 1 bar later is too late. And in fact, you can sort of see what happened here. You get this signal here, you don't get filled, and then you get another signal, and there you get filled on that one. All right. So the key here that's different is we require a pullback. Now, I've been doing this in the ES the last 3 weeks, and I ran a whole bunch of simulations today, kind of refining the entry criteria. I'm going to review that in just a minute. But what I normally do is I write programs so I can run that kind of simulation across a much greater span of time. Because the replays are so slow, you can't get a quick enough turn to really understand how it works, not just for 1 week, which is what these simulations are that I've been running here today. But I haven't had time to update the programs to do that. It's actually fairly tricky to simulate that correctly. So we're gonna have to wait before I can get data where I'm really comfortable with how this particular approach works over a greater span of time. Let's look at the other trade that happened on Thursday. And this is a part of why I really like this approach. You can see here that the market is climbing, all right, but the signal that we get here as it's thrashing it, the market has climbed into the point of control is here, the green line. The market has climbed into the value area edge, the value area high, and it's struggling to get through that. And so we actually see a short signal here, and so the system says, okay, I think you're going to fail. There's some longs here too. We can look at and see where the entries were. Unfortunately, the entry long there would have been really nice. That's the one you wanted. So you get the short here, okay, but you need you need to see a pullback. This bar is closing down. That's not a pullback. It's the next bar that shows the pullback. So we place an order off the close of that bar, 6 ticks up, and you can see that that's a good entry. And what it does is by getting that good entry, you get to scratch here, so that you're not even though we got it wrong here in this particular case, you're not going to take a loss. Now on the longs here, this is interesting. So you can see there's a long signal there. The pullback starts there. Okay, so that's the level. We're going to place an order 6 ticks away from there. Okay, and that happens to be just below where it pulls back. All right, so that 6 is fixed, and something to think about is in a future iteration is to assess where to place that order, either more intelligently, or what I'd be interested in doing is having the machine learning system say, okay, here's how many ticks you need to go to pull back, or for that entry. It's easy to look at this and go, well, that's stupid, Shane. You should just place an order, 1 tick off of there, which would be a beautiful entry, right? A nice trade. But that's just in this particular case. Other times you'll see it pull all the way back down to here, and so your entry needed to be down here. And if you got in up here, you get stopped. So don't let one instance sway you. That's why you need programs that run across a long period of time to give you a real sense for how the probabilities work out as you're dealing with this this somewhat random variation of the market as it thrashes back and forth before it finally makes its move. Okay. All right. So now let's look at the different ways that I looked at, sort of how much of a pullback to require. Okay. And then we can move on here to, for members, where is this and how to install it, all that. Hang on just a moment. Let me bring up the screenshots of the simulation runs. All right, so here we're looking at the results of the simulations runs for this week with various parameters. Now, the first thing we have to talk about is the Friday day 10/11, which was 2 days ago. You don't want to look at this number that shows 1100 and 1200 and get stars in your eyes and get all excited about that. You need to just remove that day from the equation, and the reason is that the market went absolutely berserk twice. Now, I was live trading it. I only made one tick in the ES, but when you run the simulation, just the way the bars draw, it looks like, okay, I'm going to get filled and then make all this money. The reality is that in under a second, a bazillion bars draw, and it's random fills and nasty slippage on your stops. So I had one trade that was just amazing, and then another one that gave it like 18 ticks of slippage. So just as we're talking about this, just sort of erase 10/11 from the equation. So we'll actually be looking at the running PL number for Thursday, which is in this case 337.50. All right, so let's look at what are the various parameters. So this first one is getting the signal, and then on the pullback, placing the order 4 ticks away from the close of the first pullback bar. Okay. And then this one here is 5 ticks away. And then this one is 6. And then one down here is 8. All right. And so, it's pretty easy to just look at this and look at last week, which is not enough data to make a real decision, but is something to work with here while I get the real industrial strength simulation programs running. And you can see, if we just look at the Thursday day, 10/10, with 4 tick offset on the entry, that's 337.50. All right, with 2 lost days, one of them fairly significant, and then with a 5 tick offset, it's 412.50, so it's a little bit better. But almost more important than a little bit better is that you eliminate one of these lost days. So for a lot of people, that's a big deal, even if your actual running P&L is less overall. And then when we look at the 6 tick offset, it's even better, 550 here. All right, and if you look at the differences, so you can see what. If you just look at the 4 tick offset of the 6 tick offset, what that means is if you look at that trade we were looking at, what it means is that for this trade here, instead of placing the order up here, I'm going to place it 2 ticks lower. Okay, 4 ticks away from the close of this bar, so 4 ticks away from that level, or 6 ticks away. So you can see it's a better entry if the market pulls back that much, but you run a risk of missing it. If it pulls back even deeper, and you use the 4 tick, you'll get filled here and then stopped as it continues to pull back. And so what you're seeing here, at least for this past week, is that the 6 tick offset was better. All right. The other thing that I liked about the 6 tick offset is that you have fewer trades. Okay, so in both of these cases, I'm trading 3 contracts. And the way NumTrades works here in this trade activity log is it shows total contracts traded. So 12 means 4 trades because there's three contracts per trade. So here, there were twice as many trades as here, and yet I made only $100 less. All right, the next day, same number because they both just took losses. The next day, though, Wednesday's the most interesting because on one trade, the system made 237.50, right? Over here, using 4 tick offset, you actually took 3 losses, or you took 3 trades and Two of them were losses. All right, so you had one trade, and then you took two more and got tagged. All right, and so all of this is configurable, but this is data to use to understand what to do. Once I have a better simulation program running, we'll grid search it and find sort of what the pluses and minuses are. Now the other thing is, well, what if I went more than 6 offset? What if I went like 8? And that's what where did it go? This one is. So this is, okay, instead of placing the order here, place it there. So you can see in this case you'd miss it. All right. You also have to tell the system to look for more bars before you cancel the order. So to make that clear, once we place the order, so here we place the order here, right? When do you decide that, okay, I'm not going to get filled? Cancel the order. All right. No, and what I do is I have a custom study that counts the bars and says after X number of bars, cancel the order. So that's what that's what this is right here in studies. TRT order management is after 2 bars is what I have it set at. It's configurable. So if you're going to go 8 ticks, so you have to give it more than 2 bars, because that's two entire. That's just to get to 8 ticks, you have to draw 2 bars, right? So we changed it to 3 to give it, the concept being I need to get filled as the market pulls back here, right? So you can see the result is that, let's get the other one up. You can see there, whoops, these are the competing ones. Here on Thursday, you don't even get a trade, right? So you got to look at, here's the running P&L for up until then. Remember, we're just we're ignoring Friday, which is the 11th. All right, so it's minus 237 actually. Okay. Whereas on here you actually made you made a fair amount on Thursday, so you capitalized on that. You were 237.50 positive before that day. You end up I'm sorry, 250 positive. You end up 550. So anyway, so this is what I'm using at the moment is a 6-tick offset with you got to get filled right then. You get 2 bars to get filled or you're out. And what I like is the number of trades is reasonable. It's very easy to overtrade, and so 2 trades, 3 trades, 1 trade, 2 trades, 3 trades in a day. That's all. That's perfect. That's a good number. That's reasonable. I don't like seeing 12. To me, that's 4 trades now. Is there really that many times there's opportunity? Okay, so this is different. So for members, then this is different than how we're trading the commodity markets right now, because those take an entry as soon as you get the signal, and how well it works. Requiring a pullback isn't clear yet. The initial testing on gold looked good. On oil, it looked terrible. So again, I need some stronger simulation programs to do that research, to understand better how this would apply to those markets. It's really tempting what we talked about a minute ago, which was look back at the previous. For this signal here, look back at the previous level that's been set by the market, the previous wave, and place an entry based upon that. I really like that idea. I don't know how well that would work out or how easy it is. Ultimately, a fixed number like 6 ticks, that's okay because we're using a range bar, and so the amount of movement is built into the chart. Otherwise, I don't think you could do it this way reasonably if you're using a tick chart or a minute chart. You don't really have a sense for how the market is moving in each bar with those kinds of charts. All right, so for members, there'll be instructions for how to, where the chart, basically where the chart book in the spreadsheet is, to install this. It's in the normal place. In terms of configurability, limit entry offset is right there. So it's nothing's changed. We're just using that offset. Actually, this is wrong here. So it's 6, right? And then I don't have any ads turned on, so there's no adding going on. Just take the trade, and then that's it. And here you can see I've got the system will stop trading once you lose 150 or more. Okay, and it'll stop trading once you've made 1,000. And that is it. There's nothing else different here in terms of how you would use this. There's differences in these formulas to calculate when a pullback is occurring. Okay, so that's why you have to use a different spreadsheet. The other change for members is that we're not picking and choosing which signals look best for that market. We're taking all of them, almost all of them. We're not doing the super aggressive ones. Okay, and that's because we're getting so particular on what that entry looks like. That requirement is removing much of the noise that we're trying to deal with by analyzing what specific codes are working in a market. Okay, all right. So that's it for today. Look to your email message, your weekly email from me, for more specific instructions on getting the chart book, and then the key. I think the painful thing is you've got to update the chart book for your time zone. That's the painful part. So go look at the time settings document to help you walk through that. There's a little checklist there. All right, that is it for today. Take care.